Is it still possible to afford a home in Berkeley? That's the big question I hear all the time, and I get it. With interest rates shooting up from the 2% range to over 7% in just a few years, a lot of people feel like the dream of homeownership is slipping further out of reach. But here's the thing, you might be able to afford more than you think. The media headlines are confusing. The online calculators feel off. And between changing loan programs, rising prices, and those higher rates, it's no wonder buyers feel stuck. In today's video, I'm breaking down how affordability actually works in 2025. We're going to walk through what really affects your buying power, show you simple ways to estimate your budget, and take a look at what you can realistically buy in Berkeley right now at different price points. If you're thinking about buying, this video will give you the clarity and confidence to take that next step. Let's get into it. What impacts home affordability the most? So, how do you know what you can actually afford? Well, it's not just about how much you make. Lenders look at a combination of factors, and they all work together to shape your real purchasing power. First off, your income is the starting point. That gives lender a baseline of what you could potentially afford. Then they look at your debt, credit cards, student loans, car payments, all of that get factored in. The more that you have, the lower your pre-approval amount will likely be. Next, is your credit score. A stronger credit score can unlock better interest rates, which means lower monthly payments and a higher potential budget. And of course, your down payment plays a big role. Putting more money down upfront can increase your affordability and reduce your monthly cost. But the biggest wild card in today's market, interest rates. Back in 2021, you could lock in a 30-year mortgage at 2.75% or even less. Today, we're in the high 6% to low 7% range. That one factor alone can mean hundreds or even thousands more per month for the exact same house. So, if you're wondering why that same home you could afford 2 years ago suddenly feel out of reach, it's not the price tag, it's the rate. Hey guys, my name is Derek Han, your go-to real estate advisor in the East Bay Area. My goal is to bring you valuable information on real estate related topics in the Bay Area to keep you updated and to help you make an informed decision with your real estate needs. If you like the content, please smash the like button and click subscribe for more future content. How to estimate your budget. Alright, let's run through some simple numbers so you can get a rough idea of what's possible. A quick rule of thumb is to take your annual income and multiply it by 5. That gives you a broad affordability range. So if you make $100,000 a year, your purchasing power could be somewhere around $500,000. But let's bring this home with some real world Bay Area examples. Say you're a couple earning a combined $200,000 a year, you save up $100,000 for down payment, and you got a minimal debt. With current interest rates and Berkeley property taxes, you might be able to purchase a home in the 1.1 to 1.2 million range comfortably. Now, let's say you're buying solo, making $120,000 a year with $50,000 saved up. Your realistic range may fall closer to $750,000 to $850,000, give or take, depending on your loan type and overall monthly comfort level. And that's the key, comfort level. Just because you can qualify for a certain number doesn't mean you want to stretch to it. That's why working with a trusted lender makes a huge difference. They'll help you find the sweet spot between what you qualify for and what you actually feel sustainable. Thinking about relocating to the Bay Area? Well, I got just the thing for you. I'm actually taking the time to create the ultimate relocation guide, which is meant to save you hours of research. And I have linked it down below. From top employers to the best hospitals, the top rated schools, and a boatload of other things that you need to know before you make the move. The best part of this guide is 100% free. That's right, you heard it. It's 100% free. Hope that helps. What that buys you in Berkeley right now. So now that you got a ballpark idea of your budget, what does that actually buy you in Berkeley? Let's break it down. If your budget is $700,000 to $900,000, you're most likely looking at a condo or townhome. You might find a smaller single-family home or a fixer in South Berkeley, but you need to be flexible on condition or location. In the $1 million to $1.2 million range, you start to see more options open up. Think modest 2-bedroom to 3-bedroom single-family homes, possibly in areas like Westbury, Thousand Oaks, or even Bordeaux, El Cerrito, and Albany. You might even get lucky with a property that has a bonus space or ADU potential. And if you're working with a 1.4 million plus budget, that's where you'll find more updated homes in highly desirable neighborhoods like North Berkeley, Elmwood, or Central Berkeley. Some may even come with a detached studio, a finished basement, or the great backyard. Of course, every buyer is different. Some people want turnkey. Others are willing to do a little bit of work. But these price points give you a realistic framework for what your budget can buy here in mid-2025. Smart tips to maximize your affordability. Before we wrap up, here are a few quick tips to help you stretch your budget further. First, talk to a lender early. Don't wait until you fall in love with a house. Get pre-approved ahead of time so you know exactly where you stand. Second, be open to nearby cities. El Cerrito, Albany, and certain parts of Richmond still offer great value while being minutes from Berkeley. Third, consider alternative financing. Programs like Cal HFA, 2-1 buydowns, or adjustable rate mortgages might make your monthly payments more manageable. And last but not least, try to not get obsessed over the interest rate. What matters more is your monthly payment and whether it fits comfortably within your lifestyle. You can always refinance later if rates drop. So, how much home can you really afford in Berkeley? The answer depends on your income, your debt, your savings, and how smart your strategy is. But if you take the time to run the numbers and work with the right team, you'll be surprised at what's actually within reach. If you want a free affordability assessment based on your income, down payment, and goals, drop the word assessment in the comment or DM me. I'll send you a personalized breakdown and we'll map out what's possible together. And if this video helped you out, be sure to hit that like button, subscribe to the channel, and turn on the bell so that you don't miss the next one. Thanks for watching, and I'll see you in the next video.